Stacker here. Welcome to another live stream. We have got a lot to talk about today, folks. It is Tuesday, October 24th, and we are edging closer to the abyss, it seems like, both in the economic sense and the geopolitical sense. So, we're going to cover an update on that today. We'll talk about some of the current events that are playing out across the world and what they mean for gold and silver, but specifically, I want to look at this crisis which we are facing, this time of incredible change, through the lens of the idea of a fourth turning. Now, this is a book that I have referenced on the channel several times in the past, but I hadn't read it in a little while, so I went back and I skimmed on in the world right now, and I want to go over some of the passages with you and that we can glean from this book that was written way back in current events are going to play out, and some of the things which have already actually proven to be very true. So we're going to cover that, and then I will get to the update in the news. We'll talk about everything that's going on in the Middle East and what it is going to mean for the metals, because it will have a big impact on the price of both gold and silver. And don't forget, you can buy your gold and silver at sdbullion.com. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/news. So make sure you check them out. Now, let's get right into the book here. And by the way, give me a 1 in the chat if you can hear me loud and clear on this live stream today. All right, so just to kind of set the stage for what they're talking about in the fourth turning, if you're not familiar with it, it's based on a generational theory. It's kind of a unique way of looking at history. William Strauss and Neil Howe wrote this again in 1997. If you are interested, I would highly recommend checking this book out. See some folks saying hello in the chat. Hello there. And now let's get right into this chapter here. It's a prophecy for the fourth turning. Okay, so this is sort of later in the book. It's telling us what to get ready for. Now, first of all, here's this first passage. This has to do with kind of the social fabric and the financial system. So, from the book, the boomer's old age will loom, exposing the thinness in private savings and the unsustainability of public promises. Now, that's just the beginning of this passage, but I do want to just point out that that is absolutely a trend that we are witnessing right here, right now. This is a headline from MoneyWise, featured on Yahoo Finance here, about how baby boomers are now becoming homeless at a rate not seen since the Great Depression. So, yeah, that one is pretty spot on. Now, the next generation that they're going to refer to here is the 13ers, who they say will reach their make or break peak earning years, realizing at last that they can't all be lucky exceptions to their stagnating average income. And again, that is right in line with what we are witnessing now. It's not only that these individuals are seeing their incomes stagnate, but they're seeing the purchasing power of those incomes eviscerated by the forces of inflation. So I would add that. And then regarding the millennials will come of age facing debts, tax burdens, and two-tier wage structures that older generations will now declare intolerable. And that is 100% the case. We know there is a tremendous amount of student debt out there. There is a tremendous amount of credit card debt. Those are both at record high levels. And again, millennials are being just as pressured by inflation as the rest of us. Now, back to the book. As all these generations enter their crisis constellation, the unraveling, which, by the way, that's the phase before the fourth turning. So the unraveling would have been the initial phase here, the decades of the 80s and late 90s, just for context. The unraveling era's wry acceptance that people might never get much back from Social Security will crystallize into a jolting new fear that everything from treasury bills to remortgage instruments to mutual funds could become just as suspect. And we've got some financial news that we're going to get into later in this live stream, which absolutely, I believe, confirms that. But it doesn't take, too much to understand that programs like Social Security and like Medicare and like all of these various entitlement programs and the government is on the hook for. Look at the unfunded liabilities. $210 trillion. Now, real quick, I know that there's going to be a strong pushback against me using the word entitlement to describe Social Security. That's something I've noticed when this topic comes up, that a lot of people don't think Social Security should be referred to as an entitlement. But listen, entitlement program doesn't mean, you've paid into it or not paid into it. It has nothing to do with that. The definition of an entitlement program is just a program, a government program by which a certain segment of the population is entitled to a benefit. So Social Security 100% meets the dictionary definition of entitlement program. Just I want to address that because people often take issue with me using that word to describe Social Security. And also, we're witnessing, as they mentioned here, that investors will become concerned about even things from treasury bills to remortgage instruments to mutual funds. Look at the interest rates on U.S. treasuries. They're rising at a record pace right now. The 10-year yield has been on the rise for 3 years in a row. That is the longest run up in the 10-year treasury since, I believe, 1787. So, as investors are facing either an inflation risk or a default risk on U.S. debt, and I mean, who wouldn't look at a $33.6 trillion national debt and not think that there is either some risk of a flat out default or at least getting the currency paid back or getting the debt paid back in devalued currency? It's certainly a risk, and that's why we're seeing interest rates on U.S. Treasuries move up to compensate investors for that risk. All right, now I got another passage for the book here that I want to get into. One thing I will say, though, is as this plays out, as this loss of faith in paper instruments plays out, and I believe it is going to continue, we will see precious metals serve their role, their time-honored role, as safe havens from this kind of risk, from the risk of unpayable debts being paid with currency that's just printed out of nowhere. You see the central bank come in and buy up all that debt to keep interest rates low to stop the system from crashing. And again, I've got some very interesting news about the banks we're going to get to here in just a few minutes, but a few more passages from the book that I want to get into. And do me a favor, if you're enjoying this, please smash that like button. We got 44 likes, 182 people in the live stream. I would love it if we could get that to 100. That would be fantastic. If you value this live stream, please smash the like button, get this information out. Okay, so back to the book. Before long, America's old civic order will seem ruined beyond repair. People will feel like a magnet has passed over society's disk drive, blanking out the social contract, wiping out old deals, clearing the books of vast unpayable promises to which people had once felt entitled. The economy could reach a trough that may look to be the start of a depression. With American weaknesses newly exposed, foreign dangers could erupt. Now, that's a lot to unpack in that paragraph there, no doubt. And give me a 2 in the chat if you feel like the U.S. social order is ruined beyond repair. If you feel that way, if you feel like it is impossible for our society to get back to the, quote unquote normal, if that is a feeling which you have had, then give me a 2 in the chat. And yeah, I'm seeing a lot of 2s, and I would agree. I mean, I think that is clearly a sign that we are passing through this fourth turning event. And, the economy reaching a trough that may look to be the start of a depression. Well, I mean, hello, we're there. With American weaknesses newly exposed, foreign dangers could erupt. Can you think of any foreign dangers erupting at the moment? I mean, listen, we've got a NATO war in Europe. We've got the Middle East, a huge powder keg. We're going to go over some of the latest updates here in a moment once we finish with the book, because, I mean, it's looking to me like we're on the verge of World War III, folks. I think we're headed to war if I had to bet money on it. Not that I want that to happen, but you got to be objective about these things. You got the rise of BRICS. You've got China pursuing a petro-yuan, trying to undermine the petrodollar, dumping U.S. Treasury notes. Work ethic. Rick Koritz puts in the chat here. Work ethic, question mark, question mark. Yeah, hey, I don't know if any of you have worked in a job where you've got to work with like the new generation of kids who are just coming into the workforce. And, I feel like it dates me. It makes me feel like an old crotchety man to say this, but I mean, it's incredible. The lack of attention span, the TikTok brain, it's so crazy. I mean, give me a 3 in the chat if you've observed that, because that is, clearly a sign of the civic order breaking down. And it's just, traditional American values are out the window. All right, so here's another one that I thought was interesting. This is just the tail end of a paragraph, but I think it's very relevant. The unraveling era, so again, that's the era preceding the fourth turning. The unraveling era culture warriors will no longer be attacking national institutions mostly from the outside. Come the fourth turning, they will be fully in charge. Give me a four in the chat if you think that sounds accurate. Do you feel at all like perhaps culture warriors are in charge of the current system? These are all signs of the fourth turning. It's not just about war and the economy, it is about a general societal breakdown before we can see some kind of a rebirth. Now, the concern is what shape or form will that rebirth take? You know what I mean? All right, back to the book here. This is a bit of a longer section. And, I promise I'll wrap up this fourth turning here in just a moment and we'll get to the news. But it's important to frame, I think, the stories that we're seeing today within some kind of a framework. And we are going to get to that here in a moment. But all right, so here's another paragraph. Later, provoked by real or imagined outside provocations, the society will turn newly martial. Now, this is one that I think we may be on the cusp of, by the way. I don't think we've quite gotten here yet, but this might give you an idea of what is to come. Now, some of these things have begun to play out, like this next statement. America will become more isolationist than today in its unwillingness to coordinate its affairs with other countries, but less isolationist in its insistence that vital national interests not be compromised. Now, clearly, today, we have become more isolationist in the sense that we are unwilling to coordinate our affairs with other countries. I mean, that is exemplified by the fact that more sanctions have been put in place this year and last year than I think the rest of U.S. history combined, if I'm not wrong about that. That is a sign that we are headed towards a fourth turning. The crisis mood will dim expectations that multilateral diplomacy and expanding global democracy can keep the world out of trouble. And clearly, we have seen that play out very much so over the past year. The deglobalization, the rising conflict throughout the world, the demarcation of conflicting camps, all of this is a sign of a fourth turning. Even before any conflicts arise, people will feel less anxiety over the prospect of casualties. Not sure we've gotten there yet, but if things kick off in the Middle East, folks, that may very well be the case. Yeah, Rolf Steiner puts in the chat a very good point. USA unfunded liabilities jumped from $195 trillion to $211 trillion this week. You're right, that did just happen. This number was not nearly this high last week. It was under 200 trillion. Well, I mean, I'll tell you how it happens. It happens because some of these benefits are inflation adjusted. I don't know what accounts for this specific jump, but you can expect unfunded liabilities to continue to expand throughout this fourth turning period because eventually people are going to realize none of this stuff is ever going to get paid for with anything other than devalued paper script. I mean, listen, Alan Greenspan was ahead of the game, folks. He told us that with our current system, which we still have, I think it was back in 2005, he said in congressional testimony that the system we have can move cash around and it can guarantee benefits in any amount, but what it cannot guarantee is their purchasing power. And that's exactly where we're headed. And that is exactly why when, gold and silver are trading well below their inflation adjusted all-time highs. I mean, gold, the inflation adjusted all-time high is something like $3,300. Silver, the inflation adjusted all-time high is around $200. I mean, these things are screaming deals right now as we face a period of unprecedented money printing. Because, listen, who are they going to tax to pay $210 trillion? Or, do you think that all of a sudden some politician is going to slash Social Security? I mean, there's no way. You'd never get elected. So, yeah, they're going to run the printing press because that is the politically expedient way to pay for all of these global conflicts. Back to the book here, though. Old unraveling era strategies, flexibility, stealth, elite expertise, standoff weaponry, and surgical goals will all be replaced by new crisis era strategies, mass, intimidation, universal conscription, frontal assault, and total victory. Now, we haven't seen that here in the US. However, the war in Ukraine exemplifies this significantly. This is like a World War II style battle with trenches and machine guns and tanks. And, it's not a counterinsurgency war like the U.S. has fought over the past 2 decades with the global war on terror. No, this is real, honest to goodness battlefield maneuvers with, tens or hundreds of thousands of casualties on both sides. So, we are beginning to see this, and it's probably only a matter of time until NATO gets drawn into this kind of an event. All right. By then, people will look back on the unraveling as the time when America evolved from a post war to a pre war era. And I think that it's already pretty clear that that is what we are witnessing. And then one more thing here from the book, and then we will get to the update. And someone in the chat just said this is bigger than World War I or World War II. Yeah, well, of course. I mean, everybody's armed to the teeth with nuclear weapons this time around. So, by definition, I think that the stakes are obviously much higher. Do me a favor. If you're enjoying this, if you like this fourth turning analysis, smash that like button. We're at 95 likes, 304 people in the chat. If you're watching this later, please like the video. It helps to get it into the algorithm, and I greatly appreciate it. All right, back to the book here. These are the ingredients of the climax of the fourth turning. Now, that is something that we will be on the path to hit around the year 2026, according to this fourth generational theory. The idea is that there's a catalyst which kicks off the fourth turning era, which I think we can safely say occurred in 2001, September 11th. And 25 years later or so, you reach the climax of the fourth turning. So that would be 2026. And if you want to, get all the details on this stuff, I do recommend checking this book out. I haven't put it in the description of the live stream, but later on, I'll put a link to the book for Amazon down in the description for anybody who wants to get one. All right, so these are the ingredients of the climax, which we are likely to hit here in the next couple of years, according to this forecast. You got to keep in mind, this was all written in 1997, so I think already they demonstrate a lot of foresight to get any of this correct. But let's dig into this here. So first sign, economic distress. With public debt in default, entitlement trust funds in bankruptcy, mounting poverty and unemployment, trade wars, collapsing financial markets, and hyperinflation or deflation. Yeah, I mean, we're already seeing some of that. The public debt in default. Look, we're not ever going to officially default on the U.S. debt, I don't think. I mean, that probably would be the right move to do it the right way would be to raise taxes and impose austerity and start paying down the debt. But that's not going to happen. So my money is on hyperinflation. But yeah, we're starting to see that. We've got a huge financial crisis this year, folks. It's bigger than 2008 already when you just look at the sheer dollar volume, the dollar amount involved. Anyway, so social distress, second sign here, with violence fueled by class, race, nativism, or religion, and abetted by armed gangs, underground militias, and mercenaries hired by walled communities. So, I mean, we haven't seen walled communities yet. Maybe that is coming. I certainly think that, if we saw a massive economic crisis, you could see social order here in the U.S. devolve very quickly. We've certainly seen over the past couple of years violence fueled by class, race, and nativism. Put a 5 in the chat if you agree with that. We have seen now a huge division based on religion. That's just a hallmark now of this ongoing crisis in the Middle East. So clearly that is playing out here. Cultural distress is the next one, with the media plunging into a dizzying decay and a decency backlash in favor of state censorship. So I wouldn't say that we've had a decency backlash, but certainly we have seen the rise of censorship. Put a 6 in the chat if you agree with that. If you think things are more censored now than they have been in the past, because, I mean, I think that's unequivocally true, personally. Technological distress, with crypto anarchy, high-tech oligarchy, and biogenetic chaos. Yeah, I haven't seen too much of that yet, although I suppose some, certainly the cyber warfare element of things we've already seen creeping into this conflict in the Middle East. The biogenetic chaos is kind of a creepy forecast, because I think that there is the possibility we could see some of that as part of the whole Great Reset thing. They want us eating bugs. They want, potentially bioengineered humans. Who knows? They're working on that in China, from what I understand. Probably here, too. They just don't tell you about it. But, that's a alarming sign. But hopefully, that won't get too crazy. But who knows? Next one, ecological distress, with atmospheric damage, energy or water shortages, and new diseases. If we had any new diseases over the past couple of years, yeah. Something to think about there. Also, I mean, you either feel one way or not about climate change. I don't really like to touch that too much because it seems to get people all riled up. But look, there are going to be energy and water shortages, whether those are real or engineered. We are likely to have to deal with that. We're dealing with wildfires, crazy heat waves. I'm just telling you what it seems to be to me. I'm not saying that you're causing that because you breathe and produce carbon, but the climate is getting a little bit stressed, if nothing else, just because there's a lot of humans consuming a lot of resources, and there's a lot of humans in the global south who are going to be consuming a lot more resources as time goes on. Although, here in the West, we'll probably be consuming less, if you ask me. Political distress. With institutional collapse, open tax revolts, one-party hegemony, major constitutional change, secessionism, authoritarianism, and altered national borders. And I would expect that that would be something that we'll see in a very big way as this military conflict escalates. And then finally, the last thing is military distress, with war against terrorists or foreign regimes equipped with weapons of mass destruction. Now, we have, of course, already seen that. The weapons of mass destruction, of course, turned out to be fabricated. I'm referring to the Iraq conflict, but yeah, so I mean, these are all pretty much spot on. And then another forecast here that they say in the book here is that public issues will be newly simple, fitting within the contours of crisp yes/no choices. And I think that that is reflected in how tribalistic the society has become and how everything is, seemingly latched onto by a group, and things that, you wouldn't think would become part of identity politics. Like everything becomes identity politics these days. I feel like the length of your mustache is going to determine whether one political group likes you or not. It's just ridiculous how, polarized everything has become, but that is a sign of a fourth turning event. Finally, last thing I want to read to you from the book here. Decisive events will occur. Events so vast, powerful, and unique that they lie beyond today's wildest hypotheses. Think about that. Give me a 7 in the chat if you think that there is some wild stuff that's going to be playing out over the next 5 years or so. These events will inspire great documents and speeches, visions of a new political order being framed. People will discover a hitherto unimagined capacity to fight and die, and to let their children fight and die for a communal cause. The spirit of America will return because there will be no other choice. So, again, rather alarming forecast, but I'm just reading to you from the book. Take that as you will. I will say that I think it would be wise to be circumspect as these events throughout the world play out and not get caught up in any of the madness that can follow major events. Okay, so that being said, let's get into the update here surrounding the collapse. I told you we'd be getting into some news, and we're just going to get right into it. Let's start with the Middle East, and then we'll get into the financial stuff. So we're going to burn through a bunch of stuff here just to kind of set a picture for you. But this is from today. Massive rocket barrage on Tel Aviv leaves over 1 million Israelis scrambling for shelter. Okay, now today's market action, we actually saw the price of crude oil coming under some pressure. And it seems as if, the markets are kind of anticipating that this thing is cooling off and there's not going to be any further escalation. And now, listen, I am hoping and praying that that is the case. I do not want this conflict to escalate. That will be very bad for inflation and for the global economy and for all of us, because everything will get a lot more expensive as the price of crude oil shoots through the roof. But I do think that investors right now are being a little complacent. All right, because here's another one. Blinken warns Iran that the U.S. will respond decisively to any attack. So we are already witnessing several attacks on U.S. troops throughout the Middle East. So this warning is certainly something that we should heed. This one's from Fox News. U.S. troops in the Middle East attacked 13 times in the past week. That is in Iraq and Syria. And so, you got Blinken telling Iran that we're going to respond to any attacks, and we're seeing attacks here. So it's not that hard to put two and two together here, folks. I mean, if you think Iran is just going to back down and submit here and not escalate things, I don't know. I mean, I wouldn't be betting on that. That's all I have to say. Maybe it'll be the case. I hope it is. But when I see headlines like this, rockets are fired from Syria into Israel as regional tensions rise. And we know if it's coming from Syria, it's very likely from Hezbollah, Iranian backed Shiite militias that operate in Lebanon and Syria. There's a lot of pro Iranian forces that are trained and that operate there. The IRGC, the Iranian Revolutionary Guard Corps, likely have forces stationed there. So, yeah, someone says in the chat here that they're lying. And I mean, yeah, listen, folks, in a fourth turning, you have got to take all of these updates, all of these news articles with a large grain of salt. But it does not appear that there is, a diminishing sense of urgency over there. There are calls, of course, for a ceasefire between Hamas and Israel so they can deliver humanitarian aid. The U.S. Vetoed the UN resolution to do so. And, it's not looking good, folks. It's not looking like there's going to be any kind of peaceful resolution to this, if you ask me. Maybe I'm wrong. Feel free to let me know in the chat if you think that that is incorrect, but that's the way I see it. Also, it's probably why the U.S. is preparing plans for mass evacuations out of the Middle East. There are hundreds of thousands of American citizens throughout the Middle East. And, if this conflict kicks off, they're going to have to evacuate them. And they're preparing plans just for that purpose. Now, of course, that's not a guarantee that things are going to escalate. I mean, it's being prudent to have those plans in place, but it's also could be a sign that things are about to kick off. And I think what's happening right now is everybody's just trying to get all of their strategic assets in place to determine, to get ready for this conflict. So that's why part of why the U.S. has been trying to get the Israelis to delay their invasion of Gaza. They need to wait for the USS Dwight Eisenhower, the second U.S. carrier strike group, which right now is midway across the Atlantic, to get into place. They want to make sure they have all of their firepower in place before this thing kicks off, which very likely is something that we're going to witness, if you ask me. I mean, maybe not. Again, hopefully not, because it will be very bad. But if it does happen, there's, a strong likelihood that the precious metals are going to catch a huge safe haven bid. And, if this thing kicks off with Iran, if China gets drawn in, by the way, China is sending warships now to the Middle East, we could see a major dump of U.S. treasuries. According to the latest data, the Chinese have dumped another something like $20 billion, I think, of U.S. treasuries between July and August. They've dumped over $100 billion over the past year. If we get into a significant conflict, a couple of things could happen. They could take advantage of the fact that we're committed there to make a move on Taiwan. Very well could dump U.S. treasuries. I mean, there's a lot of things here that could be very bad for the dollar. And it's hard to imagine an outcome of this war, if it escalates, that's going to be positive for the U.S. economy, because it means guaranteed higher energy prices, guaranteed higher levels of debt, bigger deficits, possibly even the Fed reversing policy. What better excuse to start running the printing presses again and monetizing debt than a global war or a massive regional conflict? I mean, you can guarantee that if we start dropping bombs on Iran, or if U.S. troops come under significant attack, or if, Hezbollah invades Israel, that there will be an immediate market reaction to that. And I just think it's a good idea to be prepared in case that happens. Not financial advice. All right, now let's get into the financial system here and just get an idea of just how fragile things are and how precarious everything is, and why I think the Fed would love an opportunity to begin lowering interest rates and running the printing presses again. So we know that one of the reasons the U.S. financial system is under a tremendous amount of stress right now is because of rising interest rates, right? The 10-year yield is at, I think, like 4.88% the last time I checked. It's at the highest level since 2007, right before the Great Recession kicked off. And, a big difference between now and then is that there's a huge amount more of outstanding debt. In 2007, the banks weren't sitting on these massive portfolios of low-yielding U.S. treasuries that decline in value on paper every time the yield on U.S. Treasuries moves up. And remember, in March, the thing that really kicked off the crisis, where we saw banks failing, was depositors pulling out their funds and some of these smaller regional banks being forced to realize their losses. And again, do me a favor, folks, if you find this to be relevant, helpful information, please smash that like button. We're at 156. I see a lot of regular commenters in the chat. I want to say a big thank you to all of you for joining. Jeff Tooley, Tiger Thomas, a longtime channel member. Thank you for joining, sir, and thank you for everybody who supports this channel. Well, okay, so let's get back into the financial crisis here and why this is nowhere near resolved, folks. This one is from the Daily Hodl here, and we're going to get into some of the numbers here in this story. $44.354 billion exits Bank of America, Morgan Stanley, and BNY Mellon in 3 months as deposit flight refuses to relent. And again, in March, the crisis was kicked off because depositors were withdrawing funds and banks were being forced to realize the losses on those troubled bonds on their portfolio. They had to sell them to raise liquidity to give depositors their money, and that made them realize these losses, which really scared investors and depositors. Well, I mean, this is like a slow motion bank run here, folks. A lot of money pulled out of those huge banks in a quarter. So here's the story. 3 U.S. financial titans just witnessed the flight of $44.354 billion in deposits in a single quarter. According to Bank of America's most recent quarterly earnings press release, the lender's average deposits fell from $1.0063 trillion on June 30th to $980.1 billion by September 30th, a reduction of about $26.2 billion in 3 months. People are pulling their money out of the banks, folks. This is not going to be good. Meanwhile, deposits at BNY Mellon dropped by $15.10 billion over the same time period. Morgan Stanley depositors pulled out $3.0534 billion, and they're not the only ones. There were also a decrease in deposits among JP Morgan, Wells Fargo, and Citigroup, who are reportedly shelling out billions of dollars to keep customers from moving their funds. The Wall Street Journal reports JP Morgan paid $21.83 billion in interest expenses in quarter 3. That's up by 170% from the same quarter. So not only are depositors pulling out their money, but in order to entice customers to keep their money there, they have to offer higher interest rates, and they are facing a large expense from that as well. So as interest rates go up, the bank's interest expenses increase and their portfolio of paper assets declines in value. You can see how this is a big problem for the financial system and why the Fed would be very eager indeed, I believe, to cut rates. They just need an excuse. So listen, World War III kicks off. First thing that's going to happen is we're going to see a big cut in interest rates, and inflation be damned. They're just going to give up on the inflation fight, I think. Of course, it's very likely that their inflation fight will fail regardless. But if we see a catalyst like a major escalation into a regional war in the Middle East, that will be it. Wells Fargo forked out $8.99 billion to customers in the same quarter. That's an increase of 275% on a year-over-year basis. So we are seeing the withdrawals escalate. Okay, they are accelerating the withdrawals from these banks. This is not sustainable. So we see the 10-year yield, the interest rate on the 10-year yield, the 30-year treasuries, all these things are going up, and we're seeing investors pulling their money out. That is why pull this chart up for you, the Bank Term Funding Program. This is the emergency lending facility that was designed to basically bail out these banks from these low-yielding assets. That's why this remains at an all-time high. This is the balance of low-yielding bonds that the Fed has on its balance sheet. It's taken these bonds as collateral from these institutions, giving them cash to give them liquidity. It's still at an all-time high. This was an emergency facility implemented in March. Does it look like the emergency is over to you? Put a 10 in the chat. We're running out of numbers here. But put a 10 on the chat if you think that this chart indicates that the emergency is not over, because I think that this is a very good indication that the crisis is still underway. They're not going to tell you that, but it's basically a stealth bank run here, folks. Also, not only are the banks under pressure because of rising yields on U.S. treasuries and investors pulling their money out, look at this one from the New York Post. Car payment defaults hit 29-year high as borrowing costs surge. So, consumers are unable to keep up with the debt service here. They're being pinched by rising inflation. The cost of just, putting clothes on their back, putting food on the table is getting to the point where they are being forced to default on loans that are increasing. So, I mean, this is going to lead to less loans being issued, of course. But not only that, the banks are going to see increasing defaults. This is not good. This means that they're going to have to be writing off all of these bad debts, So it's not just the bonds that the banks have sitting on their balance sheet that are such a problem. It's all the loans, any consumer loans, credit card loans. We're going to start seeing a big wave of credit card defaults in a very big way soon. Someone in the chat just said, "I'm not paying anything anymore." Yeah, I think that that very well could be why we're seeing such a massive increase in credit card spending. Consumers, I think, more and more will just come to the realization, like, look, I can't afford to pay this stuff off anyway, so why not just run it up as high as possible before I default? So yeah, September's delinquency rate for auto loans is the highest seen since 1994. That's reported by Fitch, the credit rating agency. And yeah, very bad sign for bonds. I mean, it's a sign that the economy, is falling apart here, folks. And it's going to continue doing that as inflation pressures drive yields on U.S. Treasuries higher. I mean, again, this is the chart for the 10-year yield. You can see it is at the highest point since 2007. And everything is much, much more fragile now than it was in 2007. The national debt was under $10 trillion in 2007. It's 33.6 and rapidly growing right now. That all has to be serviced, all of that debt. Credit card debt is at a record high. Defaults are climbing and reaching record highs. That's not going to get resolved as inflation continues to run out of control. I mean, we need a recession, a big one, to cleanse the economy, but I don't think that that's going to happen. They're going to do just like they did in 2008. They're going to paper over these problems. And of course, all of the problems from 2007 2008 still exist because the Fed refused to allow them to be worked out by the market. They just papered over them by slashing rates and buying up trillions of dollars in U.S. debt. That's why their balance sheet now, and I will say the Fed balance sheet is under $8 trillion now. I didn't see that coming. I didn't think they'd be able to pull that off. But they have managed to decrease their balance sheet to just under $8 trillion. So I got to eat my forecast on that they wouldn't be able to do that. But look at what that has cost them in terms of surging interest rates. I mean, if you put this on the 5-year chart, it becomes even more pronounced. The surging rate of interest on U.S. Treasuries. I mean, imagine if the Fed were to sell the remaining almost $8 trillion of its balance sheet onto the market. What would happen to these bond yields? Because remember, when bonds sell off, the yields move higher. We would have skyrocketing interest rates. There's no way the Fed can normalize their balance sheet. And the problem is that now inflation is continuing to remain persistent. Inflation is going to drive the interest rates on treasuries higher because investors know they're going to be getting paid in devalued currency. They need a higher rate of interest to compensate for that. Also, the massive deficit spending and borrowing and the de-dollarization around the world and the quantitative tightening will all continue to put higher pressure on interest rates until the Fed capitulates and decides to get back into money printing mode, which will happen eventually. It's just a matter of time, but it's going to take a catalyst to do that. Although certainly as we move through this fourth turning, catalysts abound. So that's it for today, everybody. If you like this video, if you found it helpful, useful, interesting in any way, shape, or form, share it with your friends. Smash that like button. That's the best thing you can do to support this channel. Consider subscribing if you haven't yet. And stay tuned because we're going to have a lot more to talk about, I think. Thanks for watching, everybody. Stay safe and happy stacking. I will catch you next time. Smart Silver Stacker out.